What's happening, guys? Corey Smith here, CoreFX, bringing you guys another weekly market analysis video here through T3 Live, their trading edition on YouTube. I appreciate you guys taking the time and sticking tuned to these videos and coming back. I appreciate it. A lot of time and effort goes into making these, so I hope there's some value you guys take out of it. Basically what I do every week, if this is new for you, is I go over last week's market weekly report. I go over the top performing and underperforming currencies. I go over what happened in the news, fundamentally, what's going on, as well as the technical charts. I go over each individual pair's indices charts and go over key levels and technical analysis developing there, as well as what to expect fundamentally in the week ahead. I also, in the next video, I break it into two videos. I also do a technical analysis video where I go over the analysis for each of the major pairs, as well as I pick a couple interesting ones out of the 28 total with the cross pairs as well. And this week, I am going to actually add cryptocurrencies to my technical analysis section. I'm not covering anything fundamentally on them. I'm not going over whether I care or don't care about the potential value in the blockchain technology or what each individual cryptocurrency is. All my attention as far as news and fundamentals is focused on actual fiat currencies, the FX markets. However, with the cryptos, I will throw in some technical analysis as I've gotten a lot of questions about it, and I did open an account to begin trading some of these cryptocurrencies. Just as I trade foreign currencies, I'm not getting e-wallets and actually buying the coins. All I'm doing is trading speculation on the change in price. So that is what these videos cover. I'm going to go ahead and jump into this week's video. It is actually Saturday, January 13th, 2018. We got done our first couple weeks of the year here, and the markets are actually starting to pick up now. This week we saw some pretty good moves. January is always a great trading month. The first quarter of the year is always a great trading quarter, and it's starting to kick off. The first week of the year was a little slow, as it usually is. Not in the equity markets it wasn't, but in the FX markets it was. And now we are starting to see it pick up. So I'm going to be looking for some more trading opportunities this week, as I had some good ones last week. And this is one of the rare weeks where last week all of our predictions for the currency moves were accurate. I went over this video last week, and as I go over each individual pair's index, they all did as predicted. I'll go over them here shortly in a minute and show you guys, but that is not common that all 8 do that. And it was really a great trading week all in all. So I'll go ahead and jump into that here now. Starting with the performance over the last week, we had the yen as the dominant performer on the week. And then we had the euro, pound, New Zealand falling close behind. CAD, US dollar, and I guess you could say Aussie and Swiss franc, but really the CAD, US dollar were the underperformers of the week. Dollar was very, very weak this week, which is what really all these positive numbers are showing, because this is all done versus the US dollar. This basket, all this relative performance, as you can see right here, is done versus the US dollar. So that's why you're seeing all this, but these pairs all did have strong moves this week. So if you were long the yen, euro, or pound this week, hopefully you matched it up against the CAD, dollar, or Aussie, and you would have gotten some good trades. My trade of the week was in euro, dollar long, as I called last week. It did pretty much just as expected, and we had a great trade off of it. Now switching over to the charts, I'll begin with the US dollar. As we have been saying for weeks now, and I reiterated last week, we had this head and shoulders pattern form as this downtrend continued, and we had a break of the neckline, and I told you guys this was a very significant break. We were looking for a retest and continuation lower, as you see labeled on here. If you watched last week's video, this is exactly what I said. We had the dollar come up, retested this 92.50-ish resistance that was the neckline and support before, and we had an extremely hard sell-off off of it. And this Friday candle close is very significant because, for one, there was no pullback. It was a straight shot downward, and then we can see we broke and closed below this support level, making it a very significant daily candle, a very strong bearish momentum with a break and close below support. So really, technically, all signs are pointing south still with the US dollar, although we could see a little bit of a rally or retest of this zone. I think the dollar just continues to drop coming into this next week. Euro, as usual, is going to be the exact opposite. We had this inverted head and shoulders here as the uptrend continued. We broke out of the neckline, came back to retest it, and shot up higher exactly as we called last week as well. You can see these lines are still drawn from last week. And we blew right through this strong resistance that was these highs that I thought price was going to struggle a little more to break, but it blew right through it. Opened higher, continued to push. And you can see here with this, again, strong bullish candle breaking resistance, plowing into new territory, and setting a higher high and closing above it. So this week, we can expect a little bit of correction, a little bit of a pullback, maybe retest this broken resistance, now support, before continuing higher. But again, same with the euro, all eyes are upwards. The yen, we were in this trading range for a while in this really choppy, ugly trending chart. No trend really, just a choppy chart. We broke out of this range. We're now trading above the moving averages, set a higher high. So price really is now looking bullish to me. What I would expect though this week is potentially a little bit of a correction. I don't know if it'll come all the way down to this 85-50 range of this breakout where this resistance was broken from the range, but we could expect to see somewhat of a correction, and then maybe we continue higher and set new territory highs. Moving on to the pound. With the pound, we had another move just like the euro. We had a pullback slightly, didn't pull back quite as far as we had expected, but we did get a pullback, a little base pattern here a little bit, and then price shot higher, set a new higher high, break and close above structure. As you can see, this is a very significant level, and now we are starting to close this gap from Brexit as we're moving back up towards the 136 area of resistance. But significant breakout here. You can expect price now to do exactly as we did and expected last week. We could expect to get a pullback, higher low form possibly, and then push higher to set a new higher high. But again, bullish, bullish, bullish for the pound. The CAD, another one that pretty much did exactly as expected. We didn't get this higher high push yet, but we had this correction. Price pulled back, came back down to this strong support level here that I can throw a label on. Bang. As you can see, 78.50, psychological number. Strong zone that's been respected in the past. Came back to tap, and we had a bullish bounce off of it. And this week, I'm expecting it to continue higher and set this new higher high up here around the 80.50 area. So that's what I'm expecting for the CAD this week. Definitely got some bullish outlook on the CAD as well. Swiss franc is the same. We had the same kind of setup here as with the euro and the pound. We had a higher high that was set. Price came back, set a higher low, bounced off this strong weekly support resistance zone here, and then shot higher. Very strong bullish candle close on Friday to set this new higher high. I think this will continue to go now that we broke and closed above this very strong level. And I think we're looking up to the 98 level up here that this blue box is on, marking this other strong support resistance zone. I think price is going to easily go back up and touch that. Australian dollar, again, another one, a similar story. We had this strong push at breaking this downtrend. We had this false breakout down here, which then turned into a massive bull run. We came up, hit this resistance. I told you guys we'd probably get a little bit of a bounce this week before continuing. We got a little bit of a bounce, not quite as much as I had thought. A little bit of a bounce, and then boom, pushed into higher territories. Again, setting higher highs, moving into new territory we haven't been in about 4 months or so. And Aussie's really just looking higher as well. Taking us to New Zealand, same story. We had this downtrend, and then price bottomed out with this inverse head and shoulders, broke out, came back to retest the neckline, hasn't looked back since. We're up here under 73 at around the 72.50 area. This 73 zone is a pretty significant level, so I'm expecting somewhat of a correction. We are pretty extended right now on price. If there were moving averages on this chart, you'd see that the moving averages were pretty far from the price. So we are looking for a little bit of a mean reversion, a little bit of a correction here before continuing higher. But again, like with everything else we've been talking about, I'm looking bullish on this pair. Gold had a strong breakout this week as well. If we switch over to the gold chart, you can see Friday had a very strong bullish push higher here. Could be correlated with the weak dollar. But we have a strong break above this zone here for gold. S&P 500 just continues to rip higher. This is just a parabolic move all through here since November that the markets have been making. Barely any corrections. You can see there were some corrections in through here, but as soon as price moves down, the bulls come in and enter at these discounted rates to continue higher. Starting to get a little bit of a euphoric parabolic move here, the beginning of the year. There's a lot of analysts and statistics, though, that say when the beginning of the year starts strong like this, most of the time in the past when we've had a strong start to the year like this, it has led to a strong stock market all year. So, that being said, with everything, the way things are looking, I see 2018 being another strong year for the stock markets. We're going to need a correction and a recession eventually, but I don't think this is the year it happens. I do think this will correct. I think we'll have this move pull back at some point to maybe this level here. I don't see any drastic corrections. I don't see even 382 or 50% correction being here, but I could see a 23.6 aggressive Fibonacci level pullback before continuing higher. All in all, though, S&P 500 is looking very bullish, and when it's like this, all we want to do is look for buying opportunities. Oil as well is crushing it. Switching it to the weekly, we broke above a significant level. As you guys can see here, it hasn't been this high since 2015, so 2014 really. So this is very significant for oil. Oil usually has a big impact on the Canadian dollar. However, lately it hasn't been so. The correlation there has kind of not been, these correlations of pairs aren't always apparent. They're dynamic, just like everything in the markets. They're always changing. And the oil-CAD correlation hasn't been as strong lately. The Canadian economy is very dependent on the energy sector, oil and all. Do a lot of business with North America, with U.S. and Mexico and other areas with their oil. So that's a big part of their economy. So usually the Canadian dollar supply and demand is tied heavily to oil. However, hasn't been lately. But that could change and that could become more correlated. So we are watching this oil price just rip higher. So we want to be watching this. If you trade commodities and you like trading oil, I would certainly look for a move like this to happen by when price comes back to around 62, 61 and ride this up higher, because I think oil will continue to push now that it's gotten this high, but we'll have to see. All right, so that covers the charts, guys. What I'm going to do now is cover last week's news really quick and then see what we're looking at for the week ahead. And hopefully you guys get a lot out of this and it helps you out with your trading next week. Starting on Sunday, we had nothing really. FOMC members speaking, nothing going on. Taking us to Monday, only real significant thing on Monday was the Bank of Canada Business Outlook Survey. Didn't even turn out to be a big market mover, but the results showed that the business sentiment remains positive in Canada. Inflation expectations kind of remained unchanged, and the economic slack is mainly limited to the energy-producing regions of Canada. So they're all in all pretty optimistic on the outlook of the economy, and with the jobs report that we just got and everything else going on, we have a really strong case for the CAD, for the Canadian dollar starting in 2018. And I see 2018, them continuing to tighten monetary policy. I see them hiking rates through 2018 still. And I think the CAD's got a lot of upside potential this year. After that, we had Tuesday. The only real thing Tuesday was Chinese inflation numbers, CPI and PPI. These are numbers that a couple years ago were very significant. Every time these numbers came out, they offered really strong trading opportunities. The stock markets responded to this pretty well, but of late haven't been too significant. Haven't really been anything that we've worried about very much, and it hasn't really presented the best trading opportunities. As you can see, though, the inflation numbers used to be a lot higher. And this is when these events were pretty significant. As you can see, though, they've subdued their inflation, and it's now in controllable around the target levels, and it's not anything too significant. That being said, the Aussie and New Zealand do still move somewhat off of this. Even though they missed the numbers here, the Aussie and New Zealand were still strong, but that's pretty much because the stock markets have been rallying and they're risk-on assets. So that would explain that. On Wednesday, we had the pound manufacturing production beat expectations, just showing continued strength in the manufacturing sector in Great Britain. They had 6 straight months of met or beat expectations for this, so that was a great reading, and we did see about a 60 pip move higher for the pound off this report. And then we had the Australian dollar retail sales. That crushed expectations as well. Huge holiday season in Australia. Really, it's just showing that the consumers are confident about the economy. They're spending a lot of money. Job growth's good. Job market's good. And everybody's just optimistic. That's what these retail sales numbers show. They show consumer sentiment and how the everyday people are feeling and spending their money. And that's a very strong sign right there that they are spending their money. They are confident about the economy. And we saw the Australian dollar jump about 50 pips off of this. Also on Wednesday, there was a report saying that the U.S. was likely to pull out of NAFTA. This is the North American Free Trade Agreement, and this is a very significant deal made in the 90s for North America. Canada, U.S., Mexico mostly. Basically just frees trade between them more easily, helps out with tariff costs and all these things, as North America trades very, very much with each other, with between the energy and lumber through Canada and U.S. and all different sorts of things. So the free trade agreement is a big deal. Donald Trump's been trying to negotiate, saying that the U.S. has an unfair agreement, and he's saying if he doesn't get the proper negotiations and agreements for the U.S., he's going to pull out. If he pulls out, this could have some pretty drastic impacts on a lot of companies and the economies. So the Canadian dollar and Mexican peso actually did kind of drop off this news. Some people were caught off guard, and some of the trader chats I have and my students and training groups, we're asking what happened to the CAD, and this is the reasoning for it. NAFTA negotiations are something definitely to keep an eye on with the Canadian dollar, and if you happen to trade the peso. But with that off the table, the Canadian dollar kind of shrugged it off and looks to be continuing higher again. Taking us to Thursday, we had the European Central Bank, the ECB's monetary policy meeting accounts. Like we covered last week, this is something that they release after their rate statement. Basically, the ECB is definitely more hawkish since they last met and cut bond purchases in October. They're happy with wage dynamics, but inflation remains low. That's been a problem, as we know, with these CPI numbers we've been following. The ECB will revisit their policy decisions this year, as Europe is seeing the best growth they've seen in a decade. The euro shot up about 100 pips off this report. This is where we call it that euro dollar long. Nice bounce off the structure. However, this is showing us that the European Central Bank is revisiting their policy. So they're going back and relooking at if they should adjust anything else any further, and they could possibly join the the monetary policy tightening cycle like the U.S. and Canada and the rest of the world starting to do. This is significant. This is why the euro is continuing stronger and why I think the euro will continue to be stronger throughout this year. Next, we went to the producer price index out of the U.S. This is the inflation numbers from the production side of the economy. It did miss expectations, continuing to show this struggle the U.S. is having with inflation. U.S. dollar continued to tank all week, and this helped the dollar move lower by about 30 pips. Then we had China's trade balance, not too significant of a report, but it blew away expectations, showing continued strength in China. And this just continued to add to the risk-on theme in the markets. All week, the stocks were plowing higher, and this is why we saw some Aussie, New Zealand, CAD, all this strength usually comes in risk-on markets. Friday, we had Inflation Friday. We had the main CPI numbers out of the U.S. as well as retail sales. And core CPI, this is the CPI without food and energy, as they're pretty volatile. This is just the basically standard CPI, although this did slightly beat expectations. Regular old CPI didn't it just met expectations. And retail sales missed expectations, core beat, but actual retail sales, including the automobile sector, missed. So this was definitely not enough good news to get the dollar recovering at all. The dollar continued to tank, especially on Friday, and these numbers just are continuing to be lackluster and nothing significant. So the dollar is just dropping. And until these numbers start picking up or anything, I don't see the dollar turning around. And from a technical point of view, the dollar looks very bearish. All right, so that covers last week. So now what we're going to do is hop into the week coming ahead, see what we got going on, what we can get prepared for, and see if there is trading opportunities to catch. And this week is not the craziest week, but there are some events worth trading. A little bit of a slow start to the week as usual, and a little bit of a slow end to the week, but the middle of the week, Wednesday specifically, is pretty loaded. So that's where we'll be looking to make the trades mostly, is around Tuesday to Thursday. That's usually my most active trading times as well, but especially on weeks like this. So Sunday we have nothing. Monday we have New Zealand's business confidence report right here. Nothing too crazy. It's a survey of about 2,500 businesses asking for their 6-month view on the economy and what it looks like. And this just gives us an idea of how the how the businesses of New Zealand feel about the economy, if they're likely to invest more money into their business or hire new workers or open new facilities. This is all spending and stimulation to the economy that is good to take a look at. And if they say that they're not very optimistic on the next 6 months and they're likely to cut employees or close locations, stuff like that, that shows their lack of confidence in the economy. So this just gives us a little bit of an outlook. It's a leading indicator to show us what the outlook is going to be in the future. Tuesday, this is a big event for the pound specifically. CPI numbers. These are the inflation numbers for Consumer Price Index. They beat expectations last meeting, and this meeting a beat should show that this data is being consistent. And we had the Central Bank of England hike rates. Let's see if we can get some. It was supposed to be a one and done, but the more we see strong readings out of things like CPI, the more likely they are to add another hike to their schedule or potentially just become more hawkish on future hikes. So CPI numbers are continuing to be very significant indicators out of most economies across the world. So whenever we see a CPI on the calendar, that's something we know is a strong moving event, and either trade around it or stay out of the markets, however your strategy is. Then we have out of the Swiss franc, we have the Swiss National Bank chairman, Thomas Jordan. He's speaking at the University of Zurich, so nothing too crazy, but whenever we have a central bank speaker, it's something we want to be following. Then on Wednesday, we have European CPI, met expectations and missed expectations last meeting, so these numbers are definitely extremely closely followed right now, and we want to really watch this. If this starts to beat expectations and inflation starts to pick up in Europe, the euro is going to most likely continue to plow higher. So this is something we want to see. If we miss this report, we could see another correction in the euro. We could see a little bit of a pullback. I'll offer some better opportunities to go long if you're trading the euro. But if this beats expectations, I think the euro is just going to continue to push higher. Biggest event of the week right here, Bank of Canada rate statement. They didn't hike rates last meeting, and they kind of shut down hopes of hiking rates for this meeting last meeting. But Canada has seen some very strong data since then, and a hike is definitely now back on the table. They had a killer jobs report, and that saw the CAD strengthen pretty big. Investors now do see a chance of the Bank of Canada continuing the tightening in 2018 with a January rate hike. So they could start the year off with a bang and hike rates again, but we'll have to wait and see what is going to happen. But now there is a chance that they will hike rates. So strong CAD could be in the makings this week. They have their press conference afterwards just to go over their decision and take some questions. Then after that, we have another big event. We have the Australian employment report. This is a significant report, and last report was a killer number. Last month shows a strong labor market in Australia, and this event typically causes pretty big moves and trading opportunities, so definitely something to be aware of, and we want to follow for Wednesday evening. takes us into Chinese GDP and industrial production on Thursday. This is pretty big numbers for Australia and New Zealand, as their economies are very highly correlated, as I've gone over multiple times. Also has a big impact on the risk on, risk off sentiment. So in the stock markets, not too much lately has this been affecting it. But all in all, China's one of the biggest economies in the world. So when they're getting strong numbers, there's more confidence out there and people are more likely to invest in riskier assets. Pretty much the only thing worth covering on Thursday. And then that takes us into Friday. We have PPI, inflation numbers out of Swiss franc, not too significant. And then retail sales out of the Great Britain. Beat expectations the last two reports. So continuation of this, again, could give investors hope and send the pound higher, as we're seeing consistent strong data across the board out of the pound. So definitely something we want to be watching for and keep an eye on for opportunities this week. All right, guys, that pretty much covers everything as far as news events, top performing, underperforming currencies, and the technical charts. Make sure you check out my next video where I go over the technical analysis breakdown of the major pairs and some of the crosses that I like. And don't forget, I'll be throwing a couple cryptocurrencies in there. Thank you, guys. I really appreciate it. Please don't forget to subscribe to this page if you like what you're seeing. Like the video. Throw a comment if you have any recommendations or just any feedback in general. I really appreciate you guys taking the time to watch these. I hope you enjoy it. I hope the value you get out of it is worth the time I put into it. So I appreciate it all. Thank you all, and I'll see you next video and next week.